Good afternoon, good morning, everyone, wherever you are. Welcome to the 1H22 Investor and Analyst Briefing for Systems Limited. My name is Raza Jafri from Intermarket Securities, and I'll be the moderator for today's event. We're very pleased to have the senior management of Systems Limited here with us today, including Mr. Asif Peer, the CEO and MD, Ms. Ruhi Khan, the Chief Financial Officer, and Mr. Tahir Saeed, the Chief Investment Officer. The format of the call will be a management presentation and prepared comments to be followed by a Q&A session. And for that, a few housekeeping rules. All participants will be on listen-only mode, even during the Q&A section of the briefing. To put up your questions, kindly type them in the question and answer box, not the chat box, the question and answer box that is available on your screen. And then the questions will either be answered there by the systems team, or I will read them out to systems management to answer. With that, I'd like to hand over the call to systems management. Asif Saab, over to you.
Okay, thank you, Raza. So good afternoon, good morning, everyone. Thanks for joining us for this analyst briefing. Love to host you guys. And as Raza said, we will have a brief presentation. I will share the start, and then Ruhi, our CFO, Group CFO, will do the financials part, and then we will have a way forward. And most of the time, we would like to spend on Q&A so we can answer maximum of your questions. So Ruhi, next slide. Okay. So we'll just briefly go through the IT sector globally, growing globally. As you guys can see that global IT services expand is growing. I think this is the recent report from Gartner. Even the slowdown is not going to slow down the digital transformation and the global IT spend globally. North America spend is going up, which is a leading market, and then we have put Middle East, where we have a strong concentration as well. That is also growing. So next. How we differ and how we are growing in today's market. As you guys have seen, we have been growing over 42% CAGR, and the last quarter we had a phenomenal result of 75% growth. We are following our strong strengths and our value proposition that we have been sharing with you guys since many analyst briefing and the reports as well. Like we keep strengthening our core competency in digital data and cloud, and we're working aggressively on bringing more technology stack, emerging technologies. We're not shying away from investment in the technologies and building up the resources and the supply. So global presence, we have been expanding globally as well to make sure that we capture the business from global market. Mostly our focus is export based, so which is our core strength. Our export-based revenue is growing year on year as well. And with recent acquisitions, we are acquiring more and more domain expertise as well, the industry specialization that will yield more and more business. We are always, as we keep sharing with you the guidelines, that over 90% of our revenue is recurring in nature. So that is our focus on the long-term contracts. Once we are in the customers, we just have a very strong focus on making sure that we grow every year ARR, annual recurring revenue. Employee ownership is our strength. We have been proud of this from day one. So, and consulting and insight driven. So these are the few value propositions that we thrive, and we are strongly focused, and our clients are valuing our services. Next. So I think you can see this composition is very interesting. Recent year, we have made a very concerted effort on like value-added business, not just getting any type of revenue. The quality of revenue is very important, because that creates a stickiness when you have a quality of revenue, and that creates a profitability and increased retention if you are doing the latest and digital transformation, the latest technology, emerging technology work. So as you can see that our BPO share, business process outsourcing share, has been decreasing year on year. We used to be like 40%, 30%, 10%, for 20% last year, even about more than 10%. So now it is 5%. So more on digital services and consulting and managed services. So that's what will keep driving, while BPO will remain, of course, where we have the customer contracts, we will keep doing that, but our core focus will be on the emerging technology and the digital side. Next. So I think I will not read through all the years, but as you can see, our CAGR half yearly is 49% since last 5 years. From a top line perspective, we have added, in 2021, we added over 2,000 people, and then now we have added again 400 odd people in IT services. We are reducing BPO, so BPO people is of course decreasing, but overall the number is high from the professional services standpoint. 2021 and 2022 has been phenomenal years for us, from a revenue, from profitability, from recognition perspective, all the accolades that what we have received as a group. I'm very proud of my team, that we have been able to achieve all these awards in 2022 as well, like Forbes Asia Best for regular and consecutively 3 years has been a phenomenal achievement by our teams, global teams, and this is really a phenomenal achievement. And many other like Inner Circle, Microsoft partner, and President Awards and Pasha Awards, highest exporter awards. We have received an SAP in 1 year. If you guys recall, we have shared in many director report. We just started SAP as a competency in a year last year, and we have gotten 2 awards already and scaled up very quickly. So next, Rui. So these accolades I've already shared, like this really helped us in winning businesses because it gives us the recognition wherever we show these. This gives us recognition because these are all independent by either principals or independent, very well-reputed companies that we are getting the awards, and partners we're getting awards. Okay, next. Our client composition is getting, of course, as we are growing, for the growth, we are adding more quality customers, and we just our focus is that every tier we need to make sure we're trying our best to convert like 500K clients to every year, and every this is our planning to, with the focus of account management, engagement management, cross-selling, upselling our services. How can we have more $10 million plus recurring customers? How many for 5 million, and so on and so forth? Because that is the key metrics that we follow: average client, average revenue per client, and average clients in each tiers, because that is showing that we have a very diverse. Also, you can see that top 20 customers doesn't give us like 90% of the business, it's still 53%. So we have very well diversified client portfolio. As you can see, about 108 customers just giving us over 100K revenue in USD. So I'm very positive that this client metrics, with the constant effort, with the constant account management focus, will keep growing. Next is our leadership team. I'm proud to have a great leadership team that we have. We've received various accolades and received this tremendous growth that you guys are been witnessing. We have a regional structure where with key leaders on the geographies and the competencies and operations. And we have seen this structure has allowed us to scale rapidly and globally. Next. So I will, this is the most important section. Ruhi will share about the financial review of HY 2022, and then I'll take it over for the way forward. Ruhi, over to you.
Yes, hello everyone. So I'll take you quickly through the financials. This is a summary of our 6 months. We closed first half of the year at 11.5 billion, which is 75% versus the same period last year. And in dollar terms, we grew by 47% with a 47% CAGR. The other important point that is to be noted on this slide is the 26% net income margin. And we have a strong cash position, liquidity position with 8.6 billion of cash and cash equivalents. This is our revenue performance quarter on quarter, where you can see that we have a growing trajectory, upward trajectory. Quarter two versus the same versus Q1 has grown by 15%, and the same quarter last year is 75% growth. And in dollar terms, the important point to note here is that even in dollar terms, we have grown 5% versus Q1 2022 and 38% versus the same quarter last year. In operating profit as well, systems closed this quarter at 1.3 billion, which is 80% growth versus last year and 38% growth versus Q1. Net income, we closed the quarter at 47% versus Q1, and it was 93% versus Q2 2021. And in net income, there is a contribution of currency fluctuations as well. And that's why the company, the management focuses more on the operating profitability growth. So this is our contribution, revenue contribution from each sector. And we are well diversified in terms of our sectors that we service. Telco is 20%, bank and finance sector, you can see, is 19%. Retail is 18%, technology is 15%. And then we are serving other sectors, healthcare, public sector, 6%. We have reduced public sector contribution. BPO, as Asif has mentioned, is 5%. So this shows that we are well diversified across industries as well. And this is our geographical presence. 44% of our revenue is coming from North America and Europe segment. 41% is from the Middle East and the other regions, and Pakistan contributes 15% to our total revenue. And this shows that we are present in 11 countries with some new customers that we are acquiring with the regional offices as well. This is a very interesting slide, which shows that 79% of our revenue is in dollars and 6% of our revenue is in euros. However, 76% of our cost is in PKR. And this gives us the leverage in our profitability to invest more to grow our revenue. Now, just a little bit on OneLoad. OneLoad is also consistently growing. You can see that the throughput for this first half is 10.6 billion. And their throughput per retailer is also consistently growing. It's 564,978 for this quarter now in 2022. And the margin per retailer is also growing. We closed this quarter with active retailers of 32,000. So I will not go into the details of this slide, but OneLoad is with the investment that has come in. They are working on developing the portfolio, developing use cases so that we can serve, and the product of the EMI product is on the verge of launch. So once we launch the product, then we are going to expand further. I will not cover ESG in this presentation because we want to spend more time on Q&A, but we will upload this presentation on our website for you to go through the slides in detail. Now I will hand over to Asif for the strategy piece.
Okay, thank you, Ruhi. Thank you. And we'll come back to the question and answers on financials or anything that you guys have. Okay, so I think we have been consistently and persistently following our strategic plan over years, and we have seen the tremendous results of doing that with consistency. Customer centricity is a key. We acquire customer and we retain, I would say, most of it, and grow along with them. So this is our key, very strong focus on customers. We just get a lot of opportunities, and digital transformation wave is on. Even with wherever even you see there is a, you can hear about the slowdown or recession or interest rates or whatever you say, customers are spending money on digital, and they have the digital roadmap because this is the only way to get your ROI. You have to, they are also all thinking about efficiencies and productivity, and it cannot happen without IT and digital services. So digital services on the boom. So that's what our focus is. Revenue diversification, Rui shared with you that how geographically diversified we are. And also we shared the client stratification as well, that we are expanding. We are not dependent on one customer or a few customers or a few geographies or a few industries or few technology services. We are very well diversified in all the areas, and and that's where the success and the growth is coming from. Of course, geographical expansion, as you might be following us, we are expanding in this year's with the recent Saudis, another expansion we did towards the end of last year. This year, South Africa, ASEAN region, and like Australia is one of the few regions that we are expanding. We'll invest and we'll grow in those markets as well. Of course, every market needs time and investment and the team, but we are very optimistic with the opportunity size, with the footprint we have, and with the references we have. It's a great opportunity. Also, inorganic growth for the first time in our history, we have done the M&A activities in the last first half of the year. We have announced that, and we are very proud that we have taken good we have done good acquisitions, which will yield the results in the future. And we'll keep, of course, exploring. We are on the exploration that wherever we get the good opportunity to complement and supplement our business, we will go for it. Next. Next slide. Okay. So investment priorities, that's important. We believe in free cash flows. We believe in the profit generation for our stakeholders and reinvesting appropriately in the growth areas. So along with the dividend payout, we reinvest in the growth for aggressive and hyper growth model. So we're looking for, as I shared earlier as well, that we are adding new markets, alliances. We will invest in that. We will add new verticals. We will invest in emerging technologies. We invest with principals. We invest with channels to make sure that we take maximum advantage over for all these things that and grow organically as well, while we are thinking and of course doing inorganic growth as well. So inorganic growth will be our priority, as you have seen, and we'll keep on our priority, and we'll keep exploring the options, not just in Pakistan but outside of Pakistan as well, so we can grow our base and we can bring more dollars. We can grow our exports and employment together. Talent is the key in today's world. I think, as I shared earlier, the demand is robust globally. It's all the talent management. It's all the retention. It's all building the supply. This is the game. Systems is, of course, being the largest IT company, we have the leverage of attracting more talent and better retention and increasing our utilization. So we are hiring aggressively again to make sure at all the levels so we have enough capacity for the future growth, enough bench for the future growth that is the demand is out there in the market. So first priority is, of course, investment in talent. That is our core bread and butter. We can't grow without that. M&A is definitely on the horizon, which we have done too, and now we have it's given us the confidence, and we will be of course selective, but go on those opportunities where it gives us, open up the market, open up the new area, give us the leadership to expand. Geographical expansion we have already shared. enriching our capabilities in horizontal and vertical industry domain expertise. Again, we will be investing on those consulting practices so we can have a high-end, top-notch dollars from the front end, the user experience part, so we can leverage our back office strength as well. Incubating new ideas. We are an innovative company. We will keep exploring the new solutions. If we find a good idea, we'll invest through our venture as well. And we'll keep building the new products and solutions for our within our domains of expertise that we have. Okay. Next. Of course, so systems growth strategy and way forward. I've already shared the customer retention, engineering skills, tuck-in acquisitions, the key, and alliances with the principals, which I shared. Principals mean the channels like Microsoft, SAP, Salesforce. These are the these are the catalysts for our growth, because that enables us to go into different markets and use those relationships and expand, because the credibility has been established already with these principles and the references are there. So that is where we are very strongly focusing on in all these markets. So I would say that retaining the customers and retaining the talent is the core way forward. Whoever can, I think that with the COVID, what we have learned is it's a great rethink era. It's where you have to rethink everything, the way how we work, the way people come to office, the diversification, the diversity, the working models, the markets. Now the world is open for us to recruit from anywhere in the world. We can employ. There is no shortage. Pakistan is not the only market. So if there is any new technology, people we need to acquire, like we are opening up a market, we can recruit and they can work remotely. So this gives us immense confidence that there is no holds bar, right? So it's a great rethink, and we keep rethinking everything on our strategy, and because it's with the growth mindset, you need to be constantly on your toes to make sure that nothing can stop or no hurdles can be there, even wherever you are. Of course, Pakistan is core strength from the supply base, but we'll keep exploring and we'll keep getting people from wherever we get. The talent is the top priority. Next. So associated companies, you guys must have seen that we have invested in e-commerce. They are disrupting, try before you buy. There's their mantra, and they are really growing fast from their customer acquisition perspective. And we just invested, not like now it's less than $1 million. At that time, it was $1 million roughly. So we see there is a good, there will be a good growth in e-commerce, and it will yield the results. I think the most interesting associated company that we have is Jugnu, along with OneLoad, that they have really disrupted the retail B2B supply chain, and they have gotten $22.5 million valuation, which gives them a good run rate, good growth strategy, and they are really far off from the unit metrics perspective. So they are one of those startups. They're not just burning cash. They are very prudent about how to grow and how to look at the unit metrics as well. So we're very excited that their success will be definitely trickle down to systems as well. Okay, next. Again, the NDC was a strategic acquisition in the similar field. And again, as I was saying earlier, that we need to acquire the new thing that complement and supplement us. We were working in the banking industry, BFSI, banking financial services industry, in all the banks, but we were not doing the core banking, which is the nucleus which all the banks run on. We were doing all the services around the core banking. So with Temenos being the top core banking platform globally, about 3,000 plus banks uses it. They have a $1 billion plus revenue itself. It's about $6 billion company. So they are growing very fast, and they're coming with the banking cloud, banking as a service, banking for everyone's banking platform. All of these things, they come coming up with a unique concept of a SaaS-based banking platform. That's a composable business architecture. We see a unique opportunity to get NDC is one of the premier partner for Temenos, not just in Pakistan. They're exclusive in Pakistan, but globally, I would say regionally very strong. And of course, going to globally with us will make sure that we get more and more customers. And I think the quality of this is the enterprise customers. The banking clients are enterprise customers. Wherever they are in the world. So while they are there, there is a huge cross-sell and upsell opportunity to sell our services as well along with them. And every bank goes through update cycle because it's digital banking, omni-channel, they have been challenged. So it's a great, I would say, acquisition from that standpoint. We are really looking forward for their 20+ years of experience, and combining our workforce and combining our market access, which we have, will enable us to take to the next level. As you can see, they have a great customer base, and again, as an enterprise customer base, which is very important. Next. And their revenue mix is interesting as well. They are also export focused, and most of the banks are their customer, but mostly export focused. So 17+ countries. Again, it gives us a market access as well. Next. So core banking modernization, as I shared, digital banking is on, everybody knows it. The digital banks, challenger banks are coming, and everybody is going on cloud. So banking cloud, that's what is hot these days. Like as you might have heard, industry cloud means telco cloud and the banking cloud. So with Temenos being there and with our cloud expertise in engineering, it really makes a great synergy. Managed services to the banking sector where the Temenos is deployed. And of course, there are so many other managed services that could be done on top of it. So I already shared banking on the cloud, and the consulting, of course, we have to strengthen. They do consulting, they have the domain experts as well, and we have to further strengthen that to make sure we do end-to-end from consulting to implementation and the managed services. Next. Global, I think, winning track record, that's, as I said, that's very important when you go for sell, like Forbes and Everest Group and all of these accolades that NDC has received over the years has put them on the map for banking industry, and especially in the Temenos world, very well respected. The another small acquisition, tuck-in acquisition, I would say, for our Dubai entity. Again, the purpose was, as I was sharing, that for growth you need the leaderships as well. You just don't need just to keep hiring developers. So when you hire the CEO and the senior leadership of any company, you can't hire all of them all the time. You have to acquire the business where it makes sense, even if it is like complementary business, similar in the Microsoft. It gives us some scale, but most importantly, the people, the leaders, right? So I think we have added them, and they are part of us, and we're really looking forward to utilize them. Next. So that's, we exactly finished in half an hour. That's what's planned. So great. Would love to answer your questions. Raza, please moderate those questions, and would love to answer as many as we can in the next 30 minutes.
Excellent. Thank you, Asif and Ruhi, for an engaging and informative presentation. As a reminder to the audience, if you have a question, please type it in the Q&A box, not the chat box, but the Q&A box. You can see it on the toolbar, and then we will put them across to systems management for them to answer. So I'll just begin. There are already a few questions that have come through, and I'll start by the first one. And this is, obviously, given the growth rate that Systems is following and its core markets that have been US and EU in the past, the question is that with interest rates going up in those markets and recession fears looming, do you see any of these as headwinds for your growth prospects?
As I explained earlier in my presentation, no, it's a BPO business, which was tied up to the interest rate. It has already shrunk, and you can see from the percentage. But consulting business, the digital transformation business, IT business is growing even in those sectors because it gives everybody is looking, because technology is evolving. Every principal is coming up with the new technologies. So I think no company, the progressive company, wants to be using the legacy technologies in today's world, right? So everyone is coming up with a plan and the budgets to make sure that they are up to their digital transformation journey. And now customers are too savvy. So customer personalization and customer focus with the user experience, and with the data that you need to grow. I think if somebody is not thinking about digital transformation, they're thinking about their data journey. They want to utilize the data. If somebody is not thinking about the data and they have on-prem legacy hardware, they want to move to cloud. So they just don't do CapEx and do OpEx. So with the diversification that what we have, we don't see anyone. I don't see IT industry or IT services market is declining as well. It is every company, as you can see the results of not just systems, but any services company, everyone has shown the strong results, from a growth perspective.
Understood. This is a follow-up question. I'm going to tie it into the first question. And I think somebody's gone through the accounts and they're saying that the revenue from North America, as you mentioned, Middle East seems to have grown very quickly, seems to have overtaken it, particularly from a consolidated perspective. So maybe a little bit more color on Middle East, because I think you've sort of explained that North America might be slower because of BPO, but what's happening in the Middle East sounds very interesting.
Yeah, Middle East, as we have been making a strong inroads, and we have been very consistent in building those clients and accounts. As you can see, $10 million plus accounts and 5 million plus accounts. So we have been working on those clients for now long. And with the market, as you see that they are always on with this oil and everything, it's favoring them, right? So their GDP is growing. In Saudis are coming up with a Vision 2030, where they are building the smart cities. And so all the public sector in Dubai, with the Expo was on, they were all investing, right? And they are still, after Expo, we were thinking that would be a slowdown. It's not a slowdown anymore. It's like they're constantly putting the dollars on the digital transformation. So I think, and also the market, in the COVID time, the players shrunk as well, that whoever could not sustain the pressure, the small partners, they were out from the market. So the companies like us is getting an opportunity to grow. And of course, the large Indian SIs, there is a resource crunch. It is not hidden, right? So in India, even it's a resource crunch. It's Vietnam, it's a resource crunch, right? So they are moving their resources to North America and Europe. So leaving and giving us an opportunity to replace them in many of the accounts. We replaced many large SIs in this region because they were focused on that side. So and they don't send their A players to these markets. So Middle East and we see a strong demand.
Understood.
And US is also growing. It's not like US has shown the decline. US in dollar terms has shown a significant growth as well. But of course, as I said, Middle East number was smaller. So the percentage wise, it has grown faster. And with our presence and with our brand name and brand equity in that region, we were able to grow faster than that.
Understood. There's a question, again, it's linked to this as to the previous two questions. And this is, I mean, obviously you are on an expansion spree and people have seen you open offices in South Africa, Egypt, Singapore. And the question is on the nature of those offices. I mean, are these, sort of regional offices looking to service regional demand? Are they generating, those markets are generating their own revenue, or maybe say Egypt is looking to tap into the Middle East market, South Africa will be servicing other markets. How do you see those centers? Or Singapore does ASEAN?
Yeah, Singapore does ASEAN for sure. Will do the ASEAN for sure, I would say. it's basically the market, the sales, right? Initially, you start with the sales and the pre-sales and the consultants, and then you build the market. You get the client, customers, partners. Again, the same strategy that what I explained. Once you get the customers, then you serve it through offshore, right? On-site, offshore, but mostly offshore business in Pakistan. So, we will, with the cost advantage that we have with the dollar devaluation, we have, and still Pakistan is the most cost-effective destination for IT outsourcing. I see there we can capture the customers like we initially we did the similar journey with Saudi and Middle East. We captured the customers, we grew them and taken them to the next level. And then we will do the same thing for Egypt and other. Egypt center is a little different because we use Egypt as a supply center as well for the resource center or supply center, where we need the Arabic speaking professionals to serve our region. So with this center, we will have the people. So of course we don't have Arabic speaking people in Pakistan. So we hire there at offshore center in Egypt and also move them to our clients or region as well. So Egypt, of course, Egypt will cover the Egypt market or African, but mostly it will be used as a supply center to grow further in this region.
Thank you, sir. This is a question, I think, pertaining to financials, and this is particularly on taxation. Have there been changes in the budget on tax that affect the technology sector and systems in particular? If so, what are those and what are the impacts?
I think only the budget impact is 0.25%, 0.25%. On the export proceeds. That's the budget that is applied only. That's the only 0.25% will hit the P&L. The rest is nothing, right? And super tax on just the other domestic income, right? I would say not the export income, just the domestic income. So we have already taken last year's in June account, and now we just have only this year's left, right? So we have already incorporated last year in the first 6 months.
So Asif, I would just like to elaborate on this because we receive a lot of questions on this. The super tax on the export income we get because we had a tax credit available under Section 65F. Some of you may be familiar with that. That's why the super tax on the export income for the tax year 2022 does not apply to us, only on the domestic income. And as Asif has said, we have already taken the cost of that in our half-year accounts.
Got it. Thank you for that. The other question, I'm going to circle back to maybe systems expansion. And I'm not sure this is true, but I mean, the question is that, the new expansion in some of the reports that they've read, analyst reports. So the questioner is asking that the expansion is via associates and not 100% owned subsidiaries. Is that even right? Is that the case? And if it is the case, does that increase the risk for systems in your view if they're not 100% owned?
All our subsidiaries like Africa, Singapore, Dubai, Qatar are 100% subsidiaries. So I don't think so. But
I also answered that question online that all our acquisitions are through wholly owned subsidiaries. The associated company only covers the North American and Europe region. But all the expansion
so the statement is not correct.
Yeah, that's what I asked. I don't know if it was true or not, but I thought I'd put it up to you guys. Excellent. So the other question now comes on, and you mentioned, Sasab, you mentioned that you tend to have sticky client relationships, and I think the question asking is, what is the extent of? Can you give some sort of number, some ballpark estimate of recurring revenue streams, especially what sort of business tends to be more sticky or more recurring? And there's another follow-up question I'd like to tie in with this, if it's possible for you to give the ballpark average client relationship duration, if it is possible to give any color on this.
Yeah, I think Rui shared in the slide as well. We have 93% recurring, roughly, greater than 90 for sure, but 93 was the number, if I recall correctly. And what kind of a revenue is sticky? I think it's a client is sticky. When you are in the customer and your mode is that you are not doing a project with them, project ends, but the relationship doesn't end. And since we are going with the enterprise customers only, they always spend on IT, and they always spend on all the technologies we do. So once you are present and once you deliver the quality product or solution or a project or resources, there is always a work, follow-up work through managed services, through support, through new work, through new area. It's all about your account engagement, about relationship, and it's a client. So our clients are recurring. And that's what I shared in the beginning as well. We don't lose customer because that's what we believe is the holy cow. And if we do, I think we will keep growing, because acquiring new customers, of course, is the key. We will keep doing it, but in any new business, acquiring new customer is not like easy stuff. You can't just open the door and get into it and sign the NDA and MSA and start doing the business. It always takes time. So you build the customers, you grow, and then as you have seen in our slide, we have added like 28 new logos over $100,000. Of course, we have added more, but might be a little less revenue. So, and every category we have added. So if we added 35 new customers, say for example, then these 35 needs to move on to tier over tier to the next tier, right? That's a job. We have to do it to keep growing.
Got it. There's a question on your acquisitions, and this pertains to, in particular, NDC Tech, and of course systems is large now. I mean, obviously, I think the consolidated revenue for the first half was 11 billion, with excellent profit margins as well, gross and net. So the question is it possible for you to share some sort of ballpark revenue or profitability estimates? What do you expect? What will NDC Tech give to you?
Yeah, NDC is a private company. I can give you. I don't want to give the revenue number in specific, but I can say that roughly it is 10-15% of our revenue.
Got it. And as you've mentioned, the hyper growth. It's in your annual report. You've mentioned it in the presentation as well. At least this is a question that I've been very curious about. What do you mean when you say it's a hyper growth? And does that mean? And again, this is a question from the audience. Will systems be taking on the Indian IT companies directly?
I think I would not. It's a huge difference. We are very small as compared to any of sizable Indian companies or any regional companies, I would say. So we have a long way to go. That's why I use that we have to keep growing aggressively. And yes, we will reach to a number which is respectable, and we all can be proud of that one, or we have created something which is a success story out of Pakistan, which we all can be proud of. So we are working towards it.
Excellent. The next question is on profitability, and that is, I mean, obviously you've expanded into new regions. Can you give some color on the expected gross margins across regions? Is there a difference across regions?
Of course, it will be. When you open a new geography, you all know that you have to invest, and our investment is not in capex. Our investment is in opex, in people, right? So those new geographies, you invest in first few years, you bleed or you grow, and with your investments, right? And as I said, we don't depreciate the investment; it's write off from the payroll, right? So other geographies that are stable, they will be profitable. They are profitable, and the margins are, as you keep growing and as you achieve economies of scale, margins keep improving. But of course, as you expand into new verticals, or new geographies or new horizontals, you invest in people, you invest in market, you invest in leadership. So of course, the margins on those sides drop as well. But on the growth-oriented companies, you have to do it. You don't have a choice to not do it.
Right. This is a question coming from the Q&A section, and this mentions that in Europe, maybe I think the report, I haven't seen it myself, but the question says that Europe revenue had a one-time impact. Is that true? And what can we expect from the Europe or EU business going forward?
Yes, it was a one-time impact on one entry, one customer, but EU will be stable, I would say. EU is one geography that what we think it will take a little bit of time to grow, like in that fashion, but it will be stable, I would say. It's not a significant portion of our revenue. Ruhi shared, I think 6% of our revenue is from EU. So even with one-time adjustment, so it's not that big of a.
All right. Another question from the question and answer box, and this is, what is, how's the labor market? I think you mentioned the supply side of things, and is systems, facing trouble finding quality recruits, especially in Pakistan? And if you can give us a sense of how many employees you intend to add in the next year or coming years. What sort of actions you're taking on trainings. It's essentially a bunch of questions, but essentially all about the people that you're taking on. How do you see that space?
I think we are blessed and lucky that being in Pakistan with the largest IT company and with the brand we have developed over the years, we are grateful. It's relatively easier for us to attract and retain people. And we are actually investing a lot in development of people, right? So you might have noticed, like we have started the programs like IT Mustaqbil program and very resource development initiatives, hiring fresh graduates, going to universities, linking with academia to produce the talent which we need in our area, not just the theoretical people who come out of the college and don't know anything. So we're working on all those areas. So we get the right amount of people and we are investing in that. Even we are investing on the people who are non-computer science degree. So that gives us the huge pool of resources, the engineers, the mathematicians, the statisticians, the MBAs, the BBAs, because now we do core banking, we do SAP, we do ERP. So we need the business experts as well. So we have very good mix now. And now I don't see there is always a business is not without challenge, but I don't see the constraint for the growth because we are investing ahead of time. We are building the bench. Last year we built the bench. You guys must have seen it. We hire crazily, and that paid off this year. And this is similar thing we will do. If you don't invest, then of course you will have a challenge, right? So to overcome the challenge, investment is required. And I think with this open world and a great rethink era where the resources are available anywhere, I can hire anyone from my Dubai entity, right? Anywhere in the world. If customer is willing to pay, somebody has to pay for service and quality of people. If somebody is willing to pay, we will get people, right? Egypt is the center. Pakistan is the large. And Egypt is also large from supply standpoint, and Eastern Europe. The market is really open for us now. And with being the global company, this gives you the leverage that world is open for supply, world is open for demand. So it matches up. Before COVID, it was a constraint. Now it's an opportunity.
Very nice. And I think a follow-up on this is, obviously we were talking, the workers or the supply side, you have obviously aggressively opened in a lot of markets. What about like senior management? I imagine you will probably need, country head, regional heads. So how's the talent pool and availability of people and willingness of people to join systems?
Yeah, as you grow and as you more in limelight, it's easier to attract those people as well. So we are blessed and grateful that people are joining us, and with the acquisitions, you get the great leaders as well. As I mentioned, that you don't do just acquisition for the companies, you do acquisition for the leaders as well, because with the company acquisition, you get the management, the leadership who has run the company, who has the sense of managing the P&L and people and HR and all of these things. So even though it's at a smaller scale, but then it is our job to mentor and train them so they can manage multi-folds. And we'll keep doing that. And I think that's what our strategy is. And I think with the acquisition and with the hiring at all the levels, and we are moving our own people as well. Like We train people, they work for us with us for n number of years, and then we move them to the new market, and we replace them with the relative less experience in the market where we are already strength. And so we moved a lot of people from Dubai because now we are mature over there. We can hire people and we can replace. So people are moving to those regions and they have the experience of international experience. So they will be able to serve better to the global markets as well.
Understood. This is an interesting question, and you know, obviously, given the Russia-Ukraine situation, it's not new now. It's been many months now. Has there been you know, a shift in business, maybe from Eastern Europe or Russian-based IT competitors over to other markets? Has systems maybe gotten more business as a result, maybe?
To be honest with you, not significant, right? Because they, I think I was reading an article on Ukraine. I think they hold it pretty well. I think if you look at their numbers, they work from home and their exports didn't decline for the first 6 months. So their IT exports didn't decline. That was a phenomenal thing even to watch. So yeah, a little bit of fall here and there, but not as significant, which everybody was expecting. And that's and the data speaks for itself, you know.
Got it. Circling back to gross margins, the question is, gross margins have been range bound between 30 to 32% over the last 5 years. We expect margins to improve as the scale of the company's operations increases.
It's a catch-22. Like as you grow more, you spend more with the growth, like 49% CAGR to maintain, you have to keep investing in resources. As I said, you have to create bench and so on and so forth. So economies of scale, if you're growing a traditional percentage, this theory works. But when you want to grow at a very high speed, then this theory doesn't work, right? Then you keep investing more and more for getting more and more revenue. And of course, the profit increases, but the percentage might be here and there, or range bound, you can say.
So the next question on the chat box is, can we expect investment or you know, systems to head towards new disruptive technologies? You contemplating maybe blockchain or AI, or are we going to stick into the current verticals? Or
No,
Web3? Somebody's asked about Web3 as well.
Yeah, AI is, we have been doing AI for years.
Sure.
Blockchain and Web3, we have also established the research wing, and the spatial team has been doing the research and metaverse and all of these areas, NFTs and blockchains and everything. So yes, but right now the business is not there significantly, but I believe it will open up as well. So yes, we are. That's no brainer, right? If we don't invest in new technologies, we can't then lead. So we do invest, and we will keep investing on it. But right now, to be honest, like it's Web 3.0 is there, but it's not like everybody is winning like millions and billions of dollars of business in there. At least in Pakistan, maybe in the developed countries, it is expanding quickly. It will catch up, and we will definitely be ready for it, I would say.
All right. The next question is on Jugnu. Currently, in which regions or cities is Jugnu providing services, and when does it go pan-Pakistan? And are you looking for similar startups in the region? You know, maybe more acquisitions along Jugnu's lines.
Jugnu is KLI right now, and that's what their focus is right now, and they will be expanding on those 3 regions. Because these are the big markets, everybody is there. We will not just go for startup crazy investments unless and until we feel there is a synergy and there is a future which complements our business strategy. Like we can utilize it for our future growth, or like any cross-sell, upsell, or where we can add value. We just, not the VC, we just don't want to put money and be on side, right? If we can't add value to those because of our expertise, then it doesn't make sense for us to do it. So that's our focus, but we will definitely do tuck-in acquisitions like NDC acquisitions, other acquisitions, which is a business savvy acquisitions, not just the startup acquisition. Startup, if there is a good startup which complements, which gives us the future, we will, but not like an aggressive, like go into anything and everything, no way.
Okay, so far we have, I think, gone through most of the questions. There are only a few unanswered questions. As a reminder, if you have a question to ask, please put it in the Q&A box. I am cognizant of time. We are reaching the 1 hour mark. But maybe till we wait for the last few questions to start coming in. There's a question from my side. From a government perspective, I mean, we talked about tax earlier, but is there anything that you would expect the government to facilitate? Are you in talks with them, or maybe giving them advice, particularly anything that can facilitate more acquisitions abroad or facilitate growth for the tech industry and systems?
I think only thing that that government can do is the foreign exchange rules, right? Foreign exchange rules are similar for IT industry and all other industries. As you all know, IT industry brings 95% or more export dollars versus any other export oriented industry, right? So we bring everything as an export, right? Versus other, like, who brings 20% as an export and 80% as an import, or 70% or whatever, right? So we should be allowed to take the money outside of Pakistan, certain percentage or whatever, which makes sense, like significant, like not 10% of average of 3 years and so on and so forth, right? So if we can do that, then it will enable IT companies to grow, expand, invest in the geographies, technologies, acquire more companies, and that will change the game. And then it will increase the export as well, because more people will bring the dollars to the country because they are allowed to take back as well. Right now, the situation is nobody is allowed to take anything out. So like, if we have even a strong balance sheet, if I need to acquire, what would I do? So that constraint is in government hand. Nobody can solve other than them. Rest is, I think, industry is very self-reliant. We don't need anything else. 0.25% tax here and there doesn't matter.
Understood. I have a new question in the chat box. This is, what are the, what's your current workforce? I mean, from a standalone perspective and as a group on a consolidated level, and can you share a number? Where do you expect to see this growing to in the next 2 to 3 years? Is that possible for you to share? Or what's the vision?
As you know, in a services business, the revenue is directly proportional to people, right? So it's giving like a revenue forecast. So I would say yes, right now it was really shared like about 5,500 people, roughly, give and take, into our workforce. And yes, as I said, with the growth rate that you're seeing, we have to grow and hire the people in the similar percentage. Otherwise, it won't happen, right?
Got it. I think most of the pertinent questions in the Q&A box I've gone ahead and asked from you. Tahir, Ruhi, if you see any questions that you feel you would like to ask or have Sasab answer, please flag them.
I think somebody asked how much cost is in non-PKR. It's about 22 or 24% roughly.
Yes, I think it just came in. That's right.
Yeah.
Absolutely. I think given that we are at the hour mark already, and don't see many new questions coming through, I'd like to hand the call back to you, Asif, if you guys have any closing remarks to make.
No, I would like to thank all of you for joining and listening to us. And we of course always welcome any other questions offline as well. If there is anybody else has any offline questions, please share it at the investor relationships, and we have very robust investor relation department, and we will try to respond to you as that. So thank you again, and looking forward for the next meeting. Thank you.
Thank you, everyone.
Thank you very much. Take care. Have a good day.
Thank you, Raza. Thank you, everyone.
Thank you.